Thank you for joining us again. We're running home stretch, and this is Business Morning on Channels Television, broadcasting from Lagos. And our discussion has been on consumer credits, business credits in Nigeria. And Dr. Chris Onalo, the CEO at the Institute for Credit Management or Credit Administration, has been talking to us on all of this. Thank you for being a part of the program.
Thank you.
Now, before we went on break, we were talking about being able to, consider the economy, not just on the parts, but on the overall, and what we produce as a nation. But I just want to ask you, now, part of the challenges of a strong consumer credit system in Nigeria is high interest rate. And very interestingly, we're going to have the MPC decision today, where we've had rates at 12% for more than a year. More than a year, we'll have the interest rate at 12%. Now, how important is a strong consumer credit system towards, or rather, how do you think that we can encourage businesses in Nigeria when we consider the high interest rate in Nigeria and the weak credit rating system for individuals and corporate institutions? How can this be improved on?
Well, the interest rate is a function of fund availability and the competitiveness of the economy. If everybody have so much access, access to funding from different sources, apart from the bank, there should be finance companies, some windows for giving out money, lending. We've had that in the 80s, where so many finance companies were assisting to give out loan to companies. And then with the avalanche of pension fund in place, and the bank having access to those funds, and banks lifting funds from other sources without much interest that they have to pay to the owners of that fund. Of course, there will be much fund available to businesses. But then, you could have fund available for borrowing, and the borrowers are not forthcoming because the operating environment is another impediment, and then that, of course, could make the interest rate of no effect. It could be lower. But then, if the banks are concentrating on high-profile borrowers with much engagement in high-profile businesses, you expect that the interest rate, which of course these businesses are willing to pay, the big shot, are willing to pay, because the project they are embarking on is quite lucrative and is able to turn in turnover for a very high proportion. So you find that the interest rate could be accepted by them. And then the small businesses, if you are operating the same level of interest rate for the small businesses, of course they will not be able to touch it. But again, if we have a competitive business, a competitive economy, where there is most activities and everybody is looking for fun to bring out your best ideas, of course the interest will go down. Interest is not going down because the economy is not very, very active. Then on individual credit rating mechanism, rating has to do with best practice. Best practice has to do with transparency. And then if you want a credit rating of an individual or company to improve, which of course could attract either investors or lenders to businesses that you are engaged in, as I've always said, sit down and put your house in order, because this thing is not amorphous. It's not something that is hanging in the air. It has to do with your character. It has to do with your attitude towards managing your business and putting your businesses in perspective that encourages lender to lend to you.
Now, the last MPC meeting, we had the cash reserve requirement on public sector deposits raised to 75%. Would you want that to be reduced so that there'll be more money to be lent, to be given out by the banks to lend to businesses? What will be your position on this decision when it's finally announced today?
Well, I think if the regulator is struggling to mop fund from circulation, not for businesses, but for individual spending, then I will have no comment on that. But if it is in an attempt to encourage the lenders to drive funds to businesses for growth and job creation, yes, it is what can be done to encourage both the lenders as well as the bank, as well as the borrowers, to arrive at economically sensible level, That is to say, the interest rate is reasonable. It is not creating further complication for businesses, that you borrow money and it has to, as you said, for years running, it's been put at 12%. But then it's extremely, we can still be adjusted to be extremely high.
So would you want the
interest rate,
the NCRR,
because it has to come down drastically.
That is actually a part, not just the overall interest rate, but we're looking at the cash reserve requirements.
The cash reserve, it has to be
reduced, to allow more funds
to allow more funds to be available, so that people can, if that is what drive the flow of credit to businesses, and we could, get the most, expected gain of job creation and creating wealth for the nation. Why not? It has to go down.
Okay.
When you compare that with other countries, you like to go there and run your businesses. But if we have the instrument and the support, it will take, because it's one thing to say, crash it down, and it will give a trigger to, economic growth, to people having access to a more comfortable business running, and then which will impact on what we expect. Then fine, do it. But if you do it and it does not translate into anything, for goodness sake, it will be an exercise that will gain no profit at the end of the day. Yeah.
Okay, just on the final note, because our time is actually up, I want to know, the need for a central database is very important to the establishment of credit risk management system, an effective one, or what we know as the Credit Bureau of the Central Bank, by the Central Bank of Nigeria, which is aimed at gathering information on the borrower's credit history from various sources. What is your general assessment of the activities of these credit bureau, and how much impact have they made to the system?
Well, there has been so much complaint, in the industry, that the intention to set up credit bureau was excellent. It was beautiful. It encourages information sharing with the aim of taming credit abuse in the system. That was well defined. But when you look at how it has fared, so far, there are so many questions. Again, people said the Nigerian way of doing things, that why are we not sharing information is a major problem. And if we have a credit bureau system and that is not sharing information, or people are not giving enough information, submitting data on their customers to the credit bureau data bank, then you find that the system will be dried, and then because you are not contributing, you are not likely to also subscribe to that. And if you don't subscribe to that, of course you are going to give credit in the normal way, where people who has not been properly verified, or who are not fit and proper to toss credit, still go about taking credit. So so far, the credit bureau, it can be strengthened, but while we commend the system for starting it at all, we have to make it purpose-based. It has to achieve the primary objective for which it was established.
Okay.
Otherwise, it will be an exercise in futility. But it's a good thing. Nigeria is a massive market. Nigeria has a very massive population of people, easygoing people who want to buy. We need it. Business people coming up, we need it. But then let us respect the rules of the game, that banks should contribute information, banks should access information, but then that is not the ultimate in credit worthiness determination of a borrower.
We have to leave it at that. Thank you for
Thank you very much.
Those insights, and of course the comments on the program. We do appreciate your time with us.
Thank you very much.
We appreciate it. Thank you. Now, that's been our discussion with Dr. Chris Onalo, the CEO of the Institute for Credit Administration in Nigeria. Okay, we're now being joined by Temple Ashaju. He is our reporter on the floor of the Nigerian Stock Exchange, joining me live now. Good morning, Temple.
Morning, Bolaji.
Yes, can you bring us to speed on what's going on the floor of the market right now?
Okay. We've got a fact right now that the entire market is awaiting the listing of Coverton Offshore Group on the Nigerian stock market today. And that will be taking place in the next 2-3 hours on the trading floor. Now, we know currently that the indicators of the market are still dropping following the decline.
Okay, we'll try and get back to Temple if we can. We have just about a few more minutes before we wrap up the show. And the Coverton is listing its in the aviation sector. It's a company that has come to also allow Nigerians to be part owners of the company. All right, I understand Temple is back with us. Temple, can you hear me?
Yes, I can hear you now, Bolaji.
Okay, just continue what you were saying about Cavatin coming to the market to...
Oh, yes. The 3.35 billion shares of that company, which is an offshore maritime and aviation group, support group rather, is to be listed in the shares, is to be listed in the Nigerian.
Okay, we'll have to let Temple go at this point in time. We do apologize for those glitches we're getting there. 3.5 billion shares of Cavatin is going to be listed on the floor of the exchange, just increasing the number of companies coming to the floor to list, and of course also expanding the new listings market. We've been having new listings in the market. Don't forget Seplat also came to the market. We've seen all their activities as well. We hope to get more of these companies, especially those in the telecoms, to also come to list on the floor of the exchange. Nigerians will be glad to have them. And on that note, we'll come to the end of Business Morning. We want to thank everyone out there for being a part of the program. We do hope you join us again, same time tomorrow. I am Bolaji Akinwale. Coming up next is News Track.